Today I want to talk about the largest short interest ever reported in AMC, which is actually happening right now. Stonks Batman has collated all of the pre and post split data and the numbers will shock you. So stay tuned and let's make some money. Later in the video, I also want to go through the two back-to-back brilliant trades we had in the Millionaire Mindset trading group, 96% on WNW and also 32% on MRIN. But now I'll dive straight in with the key information. So, Stonks Batman has collated the pre and post split data from the 15th of January 2021 up to the 15th of March 2024. He's also adjusted for that data for the APE special dividend, the conversion of APE back into AMC, and for the reverse split as well. So you can see through most of 2021 and 2022, the number of shorted shares adjusted for the reverse split in AMC ranged from between 10 to 23 million shares. But over the last few months, especially over the last few weeks since the conversion and reverse split, the short interest in AMC has been spiraling absolutely out of control. That short interest has increased from 25 million shares through 30, through 40, and now above 50 million shorted shares. Now, firstly, I think it's important to discuss and distinguish what is included in this reported short interest figure and what isn't included. So this data is pulled directly from the stock exchanges and it's the reported short interest in both AMC and APE pre-split and post-split. Now, to state the obvious, that doesn't include synthetic shares, but it also doesn't include shorted shares held overseas. Even legally shorted shares held overseas in overseas subsidiaries don't need to be reported. But even just bluntly looking at the reported short interest data, the self-reported short interest data from these hedge funds, short interest over the last 2 years in AMC, over the last 3 years in AMC, has nearly tripled. Boss Blunt has asked Stonks Batman to clarify how the data was extrapolated, how the data was calculated, and where the data was sourced from, just so there's no arguments. Stonks Batman has replied saying he's created the chart from scratch using data directly from Fintel. He's also taken the data from when APE existed and taken the AMC and APE data and obviously divided that by 10 for the reverse split. And he's even taken the data from pre-APE and divided it by 10 but also multiplied it by 2 to adjust for the APE issuance and APE conversion and the reverse split as well. So the first thing that stands out brilliantly to me is that all of those shills and all of those short sellers that told you the shorts had closed, that told you Adam Aaron had issued new shares to give to the shorts for them to close out of their short positions, were all lying, because actually shorts have increased their positions and not decreased. The literal reported data shows that shorts A have not closed their positions. It shows the shorts have not bought shares from Adam Aaron to close out of their positions or to reduce their shorted shares. And it shows actually the shorts have tripled their short positions, just the legally disclosed short positions, and have therefore added significantly to their shorts. It also shows, especially over the last few weeks, they've massively averaged down on their short positions, therefore making their liquidation price on their AMC short significantly lower as well. And it also shows you that the only reason the price of AMC has been falling is due to this significant, massive increase in the number of shorted shares. Obviously, on the supply and demand equation, demand has stayed the same, and the only reason the supply of sold shares has increased is not due to retail investors selling shares, it's not due to Adam Aaron selling shares, it's due to the shorts shorting more shares significantly. So I'll ask you to scroll down to the YouTube comments, find all of the comments saying that Adam Aaron sold shares to the shorts and those short sellers have closed out of their short positions, and call them liars, paid shills and obvious short seller supporters. I also wanted to go through these two back-to-back brilliant trades from the Millionaire Mindset trading group. The first trade we had was on WNW, which ran for 96%. WNW released some news in the pre-market, it ran up and experienced a pullback, and we waited for that pre-market breakout before jumping in, where the price pushed up significantly from $1.55 to $3.05 per share. You can see I called WNW here in the pre-market, told the group I was buying shares, and also told the group when I was selling and taking my profits on the way up, through 10%, through 36%, and the rest out near the top. Green Trader also took a separate trade on ADIL and secured 40% gains in one trade. So guys, be sure to join the Millionaire Mindset trading group using the link in the description below before the prices are increased, which will be happening next week. IC Assistance has also tweeted saying that short interest in AMC has increased by 6+ million shares in the last 5 days, saying we're now over 20% short, and it's self-reported data, which is an indication that shorts can't close. It's also a clear indication that the narrative that Adam Aaron is helping the shorts is not the case, because as I said, the shorts haven't closed out of their short positions, they've tripled their short position. And actually this tweet was posted 2 days ago on the 9th of April, where there was 52.8 million shorted shares, which has now increased today up to 53.78 million shares, so another million shares shorted in one single day. The French AMC ape also added saying that shorting at an all-time low and tripling a short position at an all-time low means that hedgies need and want bankruptcy because they're totally unglued with synthetics. Shorts have now averaged down their short position drastically, meaning the value that they get liquidated at is significantly lower as well. The only way shorts can now escape liquidation is if AMC goes bankrupt. The shorts clearly cannot close without causing a short squeeze, as short interest in AMC has tripled over the last few weeks and is now at all-time high levels. Not to mention the shorted shares held in overseas brokerages and all of the synthetic shares on top of that. As you can see from this chart, it also suggests that at a minimum, the number of synthetically shorted shares has tripled as well since our 2021 estimates. If the number of legally disclosed shorted shares has tripled, then synthetics have likely also at least tripled as well. Especially when you factor in there's likely many millions of shares that are also shorted but held in overseas subsidiaries. So maybe there's 5 times or even 10 times the number of synthetics we thirst for. As I touched on earlier, the only way these shorts succeed, or the only way these shorts escape from their short positions, is if AMC goes bankrupt, and Adam Aaron has actually weighed in on this thought. As you can see, Adam Aaron has brushed off box office woes, saying that it's inconceivable that AMC would ever file for Chapter 11 bankruptcy. He said, personally, I think it's inconceivable that AMC would have to restructure like Regal Cinemas did and file for Chapter 11. It says AMC has $4.5 billion in debt, but AMC has enough cash on hand to get through 2024, according to Adam Aaron, saying from there, the executive thinks it will be smooth sailing, since Aaron is predicting a robust 2025 and 2026 at the box office. Saying once earnings improve, everything else does too, so I actually think the problem has already been solved, which makes me quite optimistic and enthusiastic, but we just have to get there. So it seems the shorts and the short thesis have been absolutely destroyed. AMC is not going bankrupt, and therefore it's only a matter of time until the shorts are liquidated. Interestingly, it's now even getting to the point where the FDIC chief has even weighed in, saying the US is ready if a big Wall Street bank ever failed. So now all of a sudden the Fed and the FDIC chairman are talking about large Wall Street banks failing. As 741 Trey has pointed out, this is obviously something we've speculated and known about for a long time. A squeeze to the magnitude of AMC and GameStop would have a massive impact on the market and a massive impact on these Wall Street banks, likely leading to a collapse or multiple collapses. By that I mean a collapse of a bank or a collapse of multiple banks, obviously leading to a stock market crash. But interestingly, it's been pointed out the FDIC only has 1.27% of the total insured deposits held as cash. You can see here the FDIC's reserve ratio is just 1.27% of all total insured deposits, meaning the FDIC doesn't hold much cash on hand. The rest of that cash will obviously come from other members of the FDIC, aka other banks, hedge funds and private equity firms. loans. And all these banks will get bailed out and forced to pay off their liabilities, aka forced to pay for the short squeeze through taxpayer dollars. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.